If you're looking for stocks that combine strong long-term fundamentals with the kind of explosive upside potential that can turn a small investment into a serious fortune, then defense stocks should absolutely be on your radar. We're talking about a sector that's backed by government contracts, massive budgets, and growing geopolitical tensions that are forcing nations to spend big on military technology. The defense industry has never been more critical, and companies operating in this space are sitting on multi-billion-dollar backlogs, record-breaking revenue potential, and growing international demand. Today, we are diving into 3 defense stocks that have the potential to make you rich. These are not random stocks. These are companies backed with solid fundamentals, a great future ahead, and the confidence of Wall Street's biggest analysts. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The first on our list is Lockheed Martin, ticker symbol LMT. This is one of the most recognized names in the defense world and one of the most heavily relied upon by the U.S. military. Lockheed Martin has been in the defense game for decades and is the primary manufacturer of some of the most advanced military technologies the world has ever seen. This includes fighter jets like the F-22 Raptor, the Black Hawk helicopter, and most importantly, the F-35 Lightning II, which has become a staple of modern air power for both the U.S. and its NATO allies. While the company took a hit earlier this year by losing the highly anticipated Next-Generation Air Dominance, NGD, contract to Boeing, that doesn't mean Lockheed Martin is slowing down. Not by a long shot. It still holds a dominant position in air combat, missile defense, and aerospace technology. Its products are deployed in virtually every military conflict involving the United States, and that level of integration guarantees long-term government funding. More importantly, Lockheed's recent partnerships and growing demand from Europe could result in even more revenue growth. With Russia's continued aggression in Eastern Europe and growing global instability, NATO countries are stepping up. Financially, Lockheed Martin is in a strong position. For the first quarter of 2025, the company reported sales of $18 billion, which was up 4% from $17.2 billion in the same period last year. Net earnings came in at $1.7 billion, or $7.28 per share, compared to $1.5 billion or $6.39 per share in Q1 of 2024. That beat Wall Street expectations and showed just how resilient this company is, even during cost inflation and supply chain challenges. Even more impressive, Lockheed generated $1.4 billion in cash from operations and reported $955 million in free cash flow. That's a lot of financial firepower, and the company isn't sitting on it. Lockheed returned $1.5 billion to shareholders in Q1 alone through dividends and share repurchases. That means consistent income for long-term investors. At the time of this video, Lockheed Martin stock is trading at approximately $421.17. Analysts are bullish, with the average price target set at $476.88. Some even predict it could go as high as $600 over the next 12 months. That means a potential upside of 13% to 40%, depending on how things shake out with European demand and additional U.S. contracts. With a $173 billion backlog and reaffirmed guidance for 2025, this stock is positioned for long-term growth with a rock-solid foundation. Lockheed isn't going anywhere, and the bigger the global defense budget gets, the more revenue and earnings will flow into this already dominant company. Next on our list is Northrop Grumman, ticker symbol NOC. Northrop is another defense industry giant that's deeply entrenched in U.S. and allied military projects, and its specialty lies in advanced aerospace, missile systems, radar, space tech, and next-generation aircraft development. If Lockheed dominates the fighter jet landscape, Northrop is the leader when it comes to stealth bombers, missile systems, and cutting-edge space defense initiatives. The company has been investing heavily in emerging tech like hypersonics, autonomous systems, and cyber defense, all of which are increasingly relevant in today's high-tech battlefields. While Northrop's Q1 numbers may look a bit shaky on the surface, a deeper look shows a company that is positioning itself for enormous future gains. The company did report a 7% decline in revenue year-over-year in Q1 2025, with earnings per share dropping to $3.32, down 47% from last year's same period. However, the decline was largely due to the planned wind-down of certain space-related projects and a temporary earnings hit of $2.74 per share related to a loss provision on the B-21 Raiders' early production phase. This is not unusual in the defense world, where large-scale production transitions can hit earnings in short bursts. The important point is that this is a short-term issue and not a structural problem with the business. In fact, Northrop still managed to win $10.8 billion in new contract awards during the same quarter. That pushed its total backlog to a new record of $92.8 billion. And it's not just U.S. contracts. Europe plays a massive role in Northrop's international revenue. Over 50% of its international business comes from European defense spending. And with NATO countries ramping up purchases, Northrop is seeing a surge in activity from Poland, Romania, and Lithuania. For instance, Northrop was awarded a $1.4 billion contract to support Poland's air and missile defense systems. In addition, the company has signed memorandums of understanding for long-term partnerships with Romania and Lithuania to develop regional missile systems and other defense technologies. These are not small projects. They're multi-year, multi-billion-dollar endeavors. From a financial strength perspective, Northrop is still solid. Despite the temporary EPS drop, the company reaffirmed its full-year 2025 guidance and is continuing to invest in strategic growth. It repaid $1.5 billion in long-term debt and returned nearly $800 million to shareholders in Q1 via dividends and share repurchases. The company stock is currently trading around $569.74. The average 12-month price target from analysts sits at $602.69, with highs going up to $663. That represents a 6% to 16% upside from today's price. And those targets could easily move higher if Northrop continues to win major contracts in Europe or its space and hypersonic divisions ramp up faster than expected. Last on our list is Kratos Defense and Security Solutions, ticker symbol KTOS. Unlike the other two companies we talked about, Kratos is a smaller, more agile player in the defense sector. But don't let its size fool you. This company is at the cutting edge of unmanned aerial systems, or UES, also known as military drones. In modern warfare, drones have become essential. They offer reconnaissance, strike capability, and tactical flexibility at a fraction of the cost of manned aircraft. And as conflicts continue to rely on automation and AI-powered systems, Kratos is perfectly positioned to lead the charge. Just last week, Defense Secretary Pete Hegseth announced a comprehensive new strategy to increase American drone production and training across the armed forces. That announcement sent a clear signal to the market. The drone wars are just getting started. Kratos, with its Valkyrie UAS and other innovative drone platforms, is likely to benefit from increased Pentagon funding and possibly even international exports. Financially, Kratos knocked it out of the park in Q1 2025. The company reported revenue of $302.6 million, far exceeding the projected range of $285 to $295 million. Adjusted EBITDA came in at $26.7 million, which also beat expectations. And while the stock dipped slightly after the earnings call, falling 0.39% during regular trading and another 0.92% after hours, that seems more like market noise than a reflection of fundamentals. Currently, the stock trades around $59.77. According to 12 Wall Street analysts, the average 12-month price target is $55.30, with a high of $70 and a low of $40. That suggests a slightly negative near-term outlook. But in the long run, if Kratos lands more contracts, secures government support, and executes on its tech roadmap, this could be one of the biggest under-the-radar winners in the entire defense industry. Well, that concludes our list of 3 powerful defense stocks that you should be watching closely. Whether you're looking for the steady giant in Lockheed Martin, the advanced global operator in Northrop Grumman, or the next-gen disruptor in Kratos Defense, these companies are set to benefit from growing global tensions, massive government contracts, and increasing demand for military tech. If you want to protect your portfolio while aiming for high growth, defense stocks might just be your perfect battlefield. Don't forget to like, subscribe, and hit the notification bell so you never miss our next deep dive into the most promising stocks in the market.